All right, what is going on, everybody? What a crazy week on the stock market. A really good week, actually. If we take a look at all three major indices, the S&P 500 for the week was up about 6%. The Dow Jones was up near 4%, and the NASDAQ, guys, was up a whopping 8%, which is insane. And even in my own portfolio, this was just yesterday, I was up 3% just yesterday, which is crazy, guys. Just crazy. Then I was up quite a bit today as well, which we'll take a look at in just a moment. But first, guys, welcome to another Dividend Happy Hour. Today, I want to talk to you guys just about some stuff that's been going on in my portfolio. I had what is probably the biggest gain in a single day, number one, but even in a 5-day period in my portfolio this week. So I'm going to share more details on that with you, and I would love to hear from you guys as well what happened in your portfolios this week. But before we get into all that, let me know in the live chat where you guys are watching from tonight. I'd be curious to hear if we've got any dividend investing neighbors out there. And also let me know in the live chat what you're sipping on tonight for the Dividend Happy Hour. Personally, I've got a little ginger and turmeric tea with some honey. I don't know if you can hear it in my voice, but I'm feeling a little bit under the weather. Nothing too crazy yet. I think it's just the onset of a little bit of cold. I got a scratchy throat, not too much congestion, but I'm trying to get ahead of it nonetheless because I don't want it to get worse. So I'm drinking some tea, which is something I don't normally do. And truth be told, I'm not the biggest tea guy. You guys know me. I'm much more partial to coffee. But real quick, hold on. It's actually not too bad. What else are we talking about? So, like I said, guys, today we are going to share some stats on my portfolio for the week, show my best performers, worst performers, and then we'll get into some Q&A. But before we get to that, I want to do a couple quick shout outs. It's been a couple weeks since we've done this, and I apologize because there's a handful of investing milestones that I want to share with you guys. It might take us a minute, but let's go over here. The first milestone I want to shout out is from some homeless man. I'm 16 and I recently hit $200 of annual dividend income, which is crazy. Not much, but you got to start somewhere. Man, that's awesome. 16 years old getting into dividend investing. I just think that's such a smart move and so rare to see. If I could go back in time and be 16 again, I would definitely start investing or at least taking it more serious. I got my first job, guys, when I was probably going to go off on a little tangent here. Excuse me. But I got my first job. I was 15 and a half, 16, and I just saved it in cash. But if I could go back in time, I'd just put all of that into my portfolio. I think about that sometimes, and I'm always curious to think like, where would my portfolio be right now if I had taken that move? But anyway, moving on to the next shout out, guys. Julian just passed $100 a year in dividends. His next goal is $150 and doing increments of $50 after each pass. I mean, $100, 3 figures. That's an awesome milestone. Julian, congratulations. Keep up the great work, my friend. Aaron, moving on to the next one. His dividend milestone that he reached this month was 4 figures, $1,000 of annual dividend income. That's a big one. Aaron, congratulations, my friend. Keep up the great work. And then lastly, we have Anthony here, who is very new to dividend investing, but just started with M1, and he's up to $40 in annual dividend income. Anthony, congratulations on your just getting started with dividend investing. That's so awesome, man. And you'll have to keep us posted this time next year where your portfolio is at. I'd imagine it's going to be a lot higher than $40 of annual dividend income. So that's great. And before we move on to the main event, guys, I'm just going to go through the live chat real here. Just give some shout outs real quick. I see Pat here. My good friend Harris is in here. Kevin, Christian, Steve, Shamir coming from Canada as per usual. Shamir, you ever leave the house? You always in Canada, man. What's going on there? Charles, what's going on? Who else we got? Shaping, good to see you. Brett, good to see you, Brett. How you doing? We got Citizen of the Year, Phil, Tortoise, excuse me. Welcome. Who else we got in here? Coach Tim, what's going on, my friend? Jair. Man, you're gonna have to help me with this pronunciation because I really want to get it right. Sudwork's great. Nice local Davis, California brewery. Love Sudwork. I actually shot some photos and videos there one time. Big Sudwork guy. Really like those guys. Who else? We got Bill's here. Jim. Duyen? Did I pronounce that right? Duyen? I'm sorry if I didn't. Craig's here. We've got Wilmer here. Christopher. Wallet Invest. Anthony T. The whole gang's here tonight. Good to see you guys. I'm so happy to be doing this. I always look forward to these Friday night live streams. It's always fun hanging out with you guys. Truth be told, I don't know if I'll be able to go the full hour tonight. I might cut it off at 5:45, about 15 minutes short, just depending on what's going on here in the throat department for me. And you guys will see me. I'll be taking numerous sips of this tea because it does help with the throat, keep it all lubed up. That's just, Ryan, why do you got to say it like that? I'm a mess, guys. But anyways, let's get into the main event. So I want to go back over to the screen here, and we're going to go over to my dividend portfolio tracking spreadsheet, which you can grab for free if you want. There's a link to it in the description of this video. But as you can see, guys, I mean, you saw my gain from yesterday, which was an insane day for everyone. And actually, on that note, let me know in the live chat or in the replay or in the comments below if you're watching the replay, how much were you up both yesterday and today? I can't be the only one who's seen substantial gains. And I don't know if you guys noticed on when we were looking at Seeking Alpha, but look at how steep this jump is. So I know you guys out there probably have seen better gains this week than I have. So yeah, let me know in the live chat. Today was a pretty decent day, I guess. I mean, definitely not as high as yesterday, but still in the green. Last time I checked earlier today, like probably 11 or 12 p.m. Pacific time, about an hour and a half before the market closed, I was up over $100, but it's since come down to just under $90. Not too bad. Still happy to be in the green. And I hit a really cool milestone in this portfolio. I've seen this before where I hit over $40,000 in market value, but you know, last time it hit this, guys, it was like just barely over $40,000, like a few bucks, and it quickly dipped under that. Like it was only at 40,000 for a couple minutes maybe. But yeah, I think it's safe to say, unless, you know, we see another crazy drop, which is totally possible, we've surpassed 40,000 and hopefully it's here to stay. Cool little milestone. And on that note, I'm planning to do I haven't done this in a while, but a full portfolio reveal. I talk about my portfolio quite often, just kind of snippets here and there, but I do plan to make a video probably in the next couple of weeks where I'm doing a full reveal of my portfolio, going through all 23 different holdings, showing you the position size, the gain loss, and some other, you know, exclusive, never before seen statistics on my portfolio. So stay tuned for that, guys. But going back over to the screen, this is what's been going on in my portfolio today. You know, like I said, slight little gain. And now going over to Seeking Alpha, I want to show you guys my biggest gainers, or my biggest winners and my biggest losers in the last 5 days, if Seeking Alpha will load right here. I've noticed that, I don't know if you guys have noticed this too using Seeking Alpha, but it's been a little bit slow to load lately. Like it'll do that where it'll take a minute to load the screen. Sometimes even multiple minutes. I don't know what's going on there, but anyway, guys, going over to the performance tab here, these are all of my holdings right here, and we're going to organize it by the best performing it for the week at the top and then the worst performing at the bottom. And look at this, guys. Unbelievable. Lowe's saw a 12% gain this week. Let's actually dive a little bit deeper into this. I'm curious to see what did it do. So last time I looked, I mean, earlier this week, it was under $190 per share, if I'm remembering correctly. And as you can see, it's like close to 210, which is a very substantial jump. So yeah, it was 186 on the 9th, right? And then the next day it jumped up to over $200 per share, which is very bittersweet because prior to this, I was in the red with this position, which once again is bittersweet because I've been kind of buying some lows consistently for a while now, the last couple of months. And so it's been nice to be able to do that and lower my average cost. But now at this point, after the big gain, I'm up about 7.5%, which I don't know. I probably should give it a little more thought, and I'm not sure if this is too far out of buying range to continue contributing. But it's kind of funny. I was talking to actually Harris, who's in the stream tonight. We were just texting back and forth or sending voice messages back and forth, and I was saying, you know, it's an interesting thing because like a psychological thing. I don't know if this happens to you as well, but I do this thing where like I'm more hesitant to add to any position in my portfolio that's in the green. Like seeing lows, and it makes sense, but seeing lows down, you know, 10%, I'm like, yeah, let's buy some more lows. Let's lower that average cost. But seeing it up 7.5%, which admittedly is really not too much, I'm like, I don't know, guys. So are you guys like that too at all? I mean, is that just me? And I'm sure that there's like a threshold where it's like, okay, maybe wait for it to come down. But then, you know, there's still like got to be some sort of buying range. But before I continue on, I want to go back to the live chat and see what you guys have said here about your guys' gain. So Rick right here, he jumped up $670 in the last 2 days. Rick, I'd be curious to hear like what's the percentage on that? $670 is nice, by the way. Like good job, that's sweet. Kevin here, He picked up over $200, putting his portfolio officially in the green. Yeah, actually, on that note, that's another thing that happened to me as well. Prior to this, I was in the red. I think the lowest I'd seen my portfolio recently in the red was 4-5% maybe. Not too crazy, but we've since rebounded from there. Who else here? Cena right here says, it has to be the biggest gain in months. I believe since August, if I'm correct. Picked up some Amazon on Wednesday at 86, and after Thursday's market, it's back above 100. Good timing, my friend. Richard here, up $680 today. Most happy about getting out of NVIDIA. Richard, let us know in the live chat. What made you want to sell out of NVIDIA, number one? And number two, like, what did you reinvest those funds into? I'd be curious to know. Who else we got here? Anyone else sharing their... Oh, here we go. This is cool. Bob. B.O.B. Always enjoy the updates. I'll pass the $70,000 per year next week. Hold on a second. Bob, does that mean you're almost making $70,000 per year in dividend income? Am I reading that correctly? Let me know, because that's legit, and good for you if that's the case. That's awesome. Who else we got here? So, oh man, this is awesome too. Caesar's up $3K for the week. Christopher's up $1,700 in one day. One day. That's nice, man. So, I don't know if you guys, I don't know. Well, let me just put it back on the screen. So, my big gain, in case for those of you who missed it, my big gain for a day on Thursday yesterday was about $1,250, which is the biggest dollar jump I've ever seen for sure. Christopher up 17. Oh yeah, I already put that. Sorry, Christopher. Or sorry guys, my bad. Who else? Nah, not many more, but yeah, this looks like you guys kind of feel the same way sometimes. Like when you're in the green, you always want to lower your cost. Yeah. Yeah, you guys, dang. Bob with the confirmation there. Almost $70,000 per year in dividend income. Big round of applause for Bob, because that's incredible. I cannot wait to get to that level. Kyle here with a nice milestone, past 100 per year in income. Kyle, good job, my friend. That's crazy. We got a super chat here. Let's pull it up on the screen from, where'd we go? I just passed it. From Authentic Peach. Welcome to the stream. Hi, Ryan. Been watching you since July and built a near $400 annual portfolio. Notice something. You push Altria Group a lot. Does it bother you at all that you are profiting off of people's addictions from the cigarette industry? Does it bother me? I mean, is it bad if I say no? I mean, I understand what you're trying to say there, Authentic Peach, and thank you so much for the $20 super chat. I really appreciate that, but that doesn't bother me too much, and there's a couple reasons for that. Number one, you know, at the end of the day, I mean, we're all, how do I say this? We're all adults here, okay? We're all adults with control over our lives, full autonomy to make whatever decisions we choose. And ultimately, I mean, I get it. These people are addicted, so you could argue choice there a little bit. But ultimately, like, these individuals who smoke cigarettes are willingly making the decision to do so. And that's, you know, that's what they want to do. That's fine. Like, it's bad for their health. They realize that. At this point, it's no surprise to anyone. And maybe you could argue they can't help it, which is too bad. That is sad for those who do want to quit but just cannot. That's a real thing. But you know, also too, like, it's by choice that people smoke. And this kind of leads me to point number two. It's also within people's autonomy to choose to go to McDonald's or to choose to drink Coca-Cola. Or you know, there's so many different examples of this, or to buy an iPhone and spend 8 hours a day looking at the screen. There's all these different things that are symmetrical to, I guess, not smoking cigarettes, but there's all these things that are symmetrical and aren't the best for you, but that people do anyway, that we still invest in. And so, I don't know. I think that's I think that argument falls short when there's all these other examples of things that are not good for you that people still do, that we still invest in. Hopefully that makes sense. And let me know your guys' thoughts on this in the live chat, because this is a very common thing that people bring up when it comes to stocks like Altria Group or Philip Morris or you know, all the stocks in the tobacco industry. So, you know, let me know. I'm curious. And once again, we could pull up numerous examples of stocks. Hershey's, okay, you think kisses are good for you? I don't think so. People still eat them willingly. And to your point here, authentic peach. I'm not. This is no. And gather my words. That's not. I'm not saying any of this to slight anyone who feels differently. By the way, this is just my perspective, and I completely understand and respect your point of view here. And you know, ultimately, that's your decision to invest or not. There's still plenty of other great stocks out there. I want to know what your. I'm actually curious. I'm going to scroll down and see what your guys' sentiments are on this. So Joe, I think, agrees with me here. Oh, no, let's go back here. Shred right here. I think this is in regards, bats. I don't know what bats is, but I think it's something similar. Tobacco. Joe says exactly. Bill, regarding Altria, it's really helpful when the product you sell is addictive. As Ryan says, we should not feel responsible for the decisions of others. Yeah. Christian, business is business, basically. Ultimately, I think just in short, it's like, it's just, Bill said it best. It's their decision, you know? And then Charles here, doesn't have, he doesn't feel bad. He smoked for 26 years, now trying to get all that, now I'm trying to get all that money back. I don't feel bad. Yeah. Yeah. Kevin here, this is interesting. Can't help it? No, I smoked tobacco twice in my life. As a young adult and then a senior, people choose to smoke. Anyway, we can move on from this. I don't, but that's that's my thoughts on it. But once again, Peach, thank you so much for the super chat. That's awesome, and that's a great question. That's a great question, a valid question as well. And like Jair says, like I can see both sides, but I mean we're gathered for happy hour, so yeah, our happy hour drinking tea here, which it's not always tea. Like you guys know me, I often come prepared with a tall, cool margarita, which I'm so bummed that I can't indulge tonight. Well, I guess I could, but making the decision not to. And actually on this note, so I was on Instagram, just scrolling through Instagram earlier today, and I saw this post. It was some lady in Arizona just celebrated her 100. Oh, Peanut, hold on. Stop. Sorry, guys. Some lady in Arizona just celebrated her 102nd birthday, and she was asked, what is the secret to a long, happy life? And you know what she said? She summed it up in one word, guys, without any thought or any hesitation. She said tequila. And I was like, I could have told you that. Anyway, I thought that was funny. But anyway, yeah, Harris, man, you hit the nail on the head. He's being a bad boy. He is. You know what he does? One of these days when he does it, I'll have to show you guys. I have my computer chair, which is usually here. I have it resting there. And he'll scratch the chair, and it just, as I'm sure you can imagine, it drives me crazy. So Kevin here, regarding Altria Group, I think the secular decline of tobacco is a bigger worry than the moral issue. Yeah, that's a concern with Altria Group for sure. And one of their things is moving beyond smoking. That's kind of their big motto lately. And they're looking to get out. I don't know about tobacco completely, but move on from cigarettes, which obviously is like their, where they're generating the great majority of, not the great majority, but a lot of their revenue is coming from cigarettes. And so they're moving into the heated tobacco products now with the non-compete agreement with Juul. Now that that's out of the way, they have the freedom to come out with their own products. And I think they just, what was it, guys? You can help me out with this. They just announced some sort of partnership, I think, with Japan Tobacco to come out with some heated tobacco products. So it'll be interesting to see what happens there. I think it might be a good move for them to utilize the Marlboro brand, which probably is what they're going to end up doing, to come out with a product under that brand, just because it has the recognition. Marlboro is like one of the strongest brands out there too, not just in tobacco, but around the world. Kind of like up there with a Coca-Cola or a Pepsi. What else here, guys? What else can I show you about my portfolio? Oh yeah, that's what we were doing. We were going through the portfolio, sorry. Let's go back over to the screen real quick, guys. So taking a look here, we saw my biggest gainer, which was Lowe's. Well, let me take this off the screen, sorry. biggest gainer, which was Lowe's, guys. The next biggest gainer in my portfolio, going over to the performance tab, was Intel, of all things, which jumped 5.5% and officially has made its way back up over $30 per share. We'll see how long this lasts. Not holding my breath for it to continue rising. And next week is a new week, and we'll see what happens. But Starbucks also had a pretty nice gain, up 5.4%, and they're now almost pushing $100 per share again, which the last few months, and if you've been watching my videos, you'll know I've been adding pretty consistently to Starbucks. And my average cost per share just a handful of months ago was right about this price right here, $96, $97. And just from buying it, when it was in the 80s and 70s, and for a brief moment in the upper 60s, I was able to bring my average cost down from $97 per share to, I think now somewhere under, I think it's $89, $88 per share, which is great. Great, guys. And that's like going back to what I was saying earlier. That's why when it comes to like seeing stocks in the green in my portfolio, I'm like, I don't know, like it doesn't feel good to raise my average cost per share. But it's something that I and anyone else who feels that way, I think is going to have to get over, because if you think like that, and this is kind of, I think what Harris and I were talking about earlier, it's like if you don't buy stocks if you only buy stocks in your portfolio when they're in the red, you're going to have a hard time building out positions over the long term. So anyway, but let's go back over to the screen. Sorry, guys, I keep going off on these little tangents. That's the beauty of these live streams, though. It's a free-for-all, guys. Free-for-all. Procter & Gamble had a nice gain this week, 5%, which is, I wish this was in the red. I've been buying this one, too, lately, and it's been so nice being able to pick it up while it was down. I mean, what was its lowest recently? Yeah, so just recently it was 124, 123 per share, which was nice. I was in the red with the stock for a minute. And so I was loading up as much as I could every week. And I don't know where my position's at. I might be in the green now. Probably am. But as you guys can see, as we continue to scroll down, like there's some other, pretty much the great majority of stocks are up over 3%, up over 2%. And the only one that wasn't up over 1% was EPD. Now, I did have a couple losers. Chevron, which not too concerned, because look, it's still like right there at its all-time high, or 52-week high, excuse me. Main Street Capital Corporation saw a near 2% loss. Altria Group saw a near 3% loss. So, can't all be winners, which is okay. What else can I show you guys here? I don't know. I don't know if there's too much else to talk about in my portfolio. I mean, this week I picked up some, as you guys know, if you read my newsletter, which if you did not, you got to sign up for it. There's a link in the description. I'm putting out these newsletters every single week. I think I'm still trying to establish a schedule, but I think what I'll do is have them come out every Thursday. Every Thursday, first thing in the morning. So if you guys want to get an email delivered straight to your inbox from me every Thursday morning, click the link in the description. It's just at retireatryan.com/join. Sign up for the newsletter. Some good stuff there. But I'm basically showing you more insights into my portfolio, talking about my purchases for the week, every single week, along with any dividends I've received. It's all right there in the newsletter with some other fun stuff. I've had a lot of fun writing these so far. I've come out with 3 of them. Yeah, 3. It's been fun. Yeah, so I'd love you guys to check that out. It'd be, I don't know, hope you find it interesting. Maybe not. It's just a lot more gibberish, kind of like I do on these streams. It's another free-for-all. But anyway, so yeah, I picked up some Verizon this week, guys. I picked up some KRC, as I've done for the last, couple months now. Let me take a sip of my tea real quick. My tea's already getting cold, and I've had, 2 sips, 3 sips. What did you guys buy this week? Let me know in the live chat. And also, let me know in the comments below if you're watching the replay. Let me know which stocks you bought this week. This tea's growing on me, guys. Okay. Let's see here. I want to pull up some comments too. Because now, guys, what we're going to do, we're going to move on to just the Q&A session of this video. And let's see, I talked about earlier in the stream, possibly ending early tonight about 5:45, which is about 20 minutes from now. I just kind of want to see how I'm feeling. I'm starting to get, I don't know if you guys can tell, I'm starting to get kind of sniffly. And I don't really want to put you guys through that for a full hour. But I had to at least come and show up for you guys. Like I said, I look forward to doing this all week. And so I had to at least come and hang out with you for a little bit. But anyway, I do see a question here from the beginning of the stream from Jason, who said, "Hey, Ryan, what do you think of consistent buying even on," oh, this is perfect. We were just talking about this. What do you think of consistent buying even on green days? Do you buy weekly / monthly no matter how much the stock is up? Do you ever buy shares above your average cost per share? Man, yeah, Jason, man, I'm sorry I didn't see this earlier, but this is just so coincidental that we were just talking about this. So I'm saving that because I want to answer that question in a newsletter. So what do I think of consistent buying? Yeah, honestly, so just to answer the first question, I think consistent buying, whatever schedule you choose for yourself, whether it's once a month, whether it's once a week, twice a week, I think it's important to, at least for you know, the average person, I think it makes sense to have some sort of strict schedule that you follow week in, week out, month in, month out. Personally, I just think that's going to be the easiest and best way to have long-term success and build your portfolios, just by being consistent. I mean, it's kind of common sense when you think about it, right? Just like with anything else, consistency breeds success. Next, do you buy weekly, monthly, no matter how much the stock is up? Yeah, and so kind of my rule of thumb, I mean, ideally I like to buy stocks that I can lower my average cost per share on, but this is what I was talking about. Like, there's some stocks that are in the green that I'll still buy it, but it just depends. It just depends how much in the green I am with certain stocks. Like for a long time, I wasn't buying Procter and Gamble because I was up like 25% with that position. Maybe not that high, but 20%, 15, 20%. And I was like, no, that's too high for me. But then it dipped down into the red, or at least close to break even. Even when I was up maybe 2-3%, I started buying Procter and Gamble. So you just kind of have to use your discretion on what you think is a good price to buy. And then this last question here, which is great. Do you ever buy shares above your average cost per share? That kind of ties into what I just said. Yeah, sometimes it just depends. Oh, sorry guys. Get a FaceTime. Okay. Sorry guys. Look. I'm a mess over here. The cat scratching the chair. Okay, I'm sick as a, not that sick, but I'm sick. I'm getting FaceTimes. Why do you guys come here? Like, this is just nonsense. But anyway, to briefly answer that last question, yeah, I will buy stocks when they're above my average cost. It just depends. It just depends on the circumstance. Realty Income is one of those stocks in my portfolio I haven't bought for a long time, like since I started dividend investing, because it's just been up so much. Like Realty Income usually sits 20 to 25% above my cost basis. So I'm like, yeah, I'll just work on other things until Realty Income comes down to an acceptable level for me. And that's my MO. If there's stocks that I want to buy that are too, I don't want to say overvalued, but kind of outside of buying range, I'll just, look to other things in my portfolio. From my experience so far, and I'm hoping this will change as the years go on, there's always a stock in the red in my portfolio, at least one. So, that gives me something to buy if I so choose. Let's see here. I'm going to pull up another question here. Let's see. And thank you guys real quick. Thank you guys so much for tuning in. We're about 30 minutes now into the stream. 98 investors strong. I'm so happy to see all of you guys tuning in. And I really appreciate you listening to my gibberish and supporting me on the channel. It's a lot of fun. And we didn't do this early in the stream, but let's do a quick toast. I mean, here's to you guys. I really appreciate all you guys. It's fun doing this. Okay. Oh my gosh, this is crazy. Aaron, I bought into AMAT. I don't know what that stock is. About 3 to 4 weeks ago at a convenient bottom, and I'm currently up 43% on my position. That's crazy. Man, good stuff. Let's see what else we got here. I'm a little bit behind in the chat. I've kind of been bouncing around in the chat, but I'll try and catch up now. Let's see. Let's see here, guys. What else we got? Oh, Shamir. Hey, Ryan, I went to Starbucks the other day and got a coffee and thought of you. Oh, thanks, man. I appreciate that. So for those of you who don't know, I'm a big coffee guy. Love my Starbucks. It's my biggest holding. Starbucks is the only position in my portfolio that I have over $3,000 invested in, which for me is a lot of money at this stage in my investing journey, my investing career. It's kind of a lot, but yeah, Starbucks is my biggest holding. Actually, this mug right here is a Starbucks mug. This is something really fun that they do. I'll hold it up a little bit closer to the camera so you guys can see. And you probably already know about this. Well, let me do this so it focuses in. Yeah, so they do these. I don't remember exactly what it's called. I think it's called Been There. And they do these basically novelty mugs from all these different locations. This one's obviously from Hawaii. And my girlfriend and I kind of started collecting these a little bit. We have so far just this one, and we have one from here, Las Vegas, where I live. And looking forward to adding more. But I think it's a really fun thing that they do. And, you can never have too many coffee mugs. You guys should see like our cup cabinet with all the mugs. Like we have more coffee mugs than we have normal cups. It's pretty ridiculous. Let's keep going here. Okay, so Phil wants me to look at Walgreens' recent gains chart. It's trading like a growth stock. Let's check it out. I haven't looked at Walgreens for a while. And you know what? While we're over here, let's take a look at what some other popular stocks have been up to. So let's see what Walgreens is doing. And I'll tell you guys what, this is random, but I'm having total deja vu right now. I don't know if you guys ever get that, but yeah, I'm having it big time. So, okay, and that's just crazy. In the last month, Walgreens is up near 28% or over 28%. And just in the last week, they've seen a huge gain, up 7%, man. That's nice. Let's go look at this, though. I want to... I kind of made this. I'm going to continue adding to it over time, but in Seeking Alpha, I just made a list of like all the popular dividend stocks that I don't have, just to keep an eye on them, just to, keep a pulse on what's going on out there. So out of this list, which is, as you guys can see, it's a very long list of stocks. This is just today. I want to go over to the week. So just this week, it looks like the biggest gainer actually was T. Rowe Price, man. And I saw a couple of you guys mention T. Rowe in the live chat. I'm sorry I didn't pull up those comments yet, but man, an over 20% gain for T. Rowe Price. That is nice. Scott's Miracle-Gro had a nice gain too, up 19%. I'm still wary about this stock. I really want to like this stock more than I do, but I'm just not there with it. Lamb Research is a great company. Up 15.7%. And I got to shout out my friend North in the Discord group. He has a YouTube channel here called EBS Invests. And he's the one who told me about Lamb Research a couple months ago. And it looks like a really great company. And for those of you who don't know, this company essentially, they manufacture the equipment that semiconductor companies use to make the chips. So they're kind of selling the analogy that I like to use with this. They're selling the semiconductor shovels to the gold miners. You guys get the analogy. But yeah, really good company, pretty solid financials and fundamentals. So definitely worth a look. And at this point, I'm sure it's on a lot of you guys' radars. It's become quite a popular stock from what I've seen. TSM, speaking of semiconductors, they're up 13.4% this week. Qualcomm is the same, up 13.11%. Whirlpool had a nice gain. This has been a cheap stock for a while, guys. Whirlpool is up 12.25%. We've got Nvidia up 11.25%. Boeing up near 11%. AMD up double digits as well, and some other stocks like a lot of green. And I saw some red down here. Only 2 stocks in the red for the week: Hershey's and ExxonMobil. Not too bad. So yeah, a lot of good action in the stock market this week, guys. A lot of good action. So let's keep going on. Shamir wants to know what's Peanut's stock pick this week. I don't know. He is grinding gears though. Let me tell you, I don't want to talk to him right now. He's keeps scratching my chair. He's every time he uses his litter box, he gets litter everywhere. God, I'm getting another phone call. It's my mom. Can you believe her? Mom, live streaming. I'll call you in a bit. Let's see what else we got here. Oh, interesting. Bill, I used to work for a company that made tetraethylene. I think I pronounced that right. Remember that stuff? No new producer was going to enter the business. The company could charge very handsome prices. Thinking of Altria Group. Okay. Yeah, Shamir, this is interesting. Tea rebounding lately towards $20 again. Yeah. So I don't know if you guys caught my Verizon video from Wednesday. If not, definitely check it out after the stream. But it's been interesting. So after this recent earnings, the recent earnings weeks, both AT&T and Verizon reported. Okay, Verizon on the top and bottom line actually put up decent numbers, but they lost some subscribers in, I believe, their postpaid phone consumer segment. And they lost quite a bit of subscribers to price increases. They raised the prices. Consumers didn't like that. Or their customers didn't like that. Unsubscribed. And what happened? AT&T gained a ton new customers. AT&T, I think this quarter, I'm not going to get it quite right, gained something like 708,000 subscribers I could have that wrong, but I think it's somewhere in that range. And AT&T put up some pretty good earnings as well. And all of this is to say, the point I'm trying to arrive at is it's been interesting to see the sentiment change between these two stocks. At least in my investing career, which has only been a couple years now, AT&T has kind of been the underdog, or been, getting a lot of dirt kicked their way. People have not liked AT&T as much as Verizon, which rightfully so. We don't have to go into it. I'm sure you guys all know, why that is: management, bad acquisitions, high debt load, just overall bad decisions, right? But it seems like these last couple quarters after the Warner Media spinoff, they're kind of starting to change the trajectory, and we're seeing some good momentum from AT&T. Hence, like Shamir said, rebounding towards $20 per share. Meanwhile, Verizon is going down, and I bought some Verizon this week. It's like one of my worst performing positions right now: Verizon, Intel, and 3M. Let's see. Oh, Peach too. Like, going back to earlier, didn't want to put you on the defensive like that, but it's becoming a running joke in my family. We all watch you. Oh, that's awesome. Of how often you bring up Altria. Personally, I would feel a little dirty holding its stock, and I apologize if I came off defensive. That was not my intent. I know you were just asked. I know you weren't. I know you didn't have any ill intent with that question. Like, and I'm sorry if that my response came off with a little attitude. I didn't mean it like that. And I know you were just curious, and I do appreciate the question. And with that said, like, you guys are all more than welcome to press me on this stuff. Like, it keeps me honest and makes me have to reinforce my stance on these things. So I think that's important. Oh, this is interesting. KRC says he loves KRC. This is the first time. So, Kevin, I have not heard anyone else say anything about KRC. And I honestly think it's a really underrated real estate investment trust. And you guys, I really wish you guys would take a look at it if you haven't done so, because like I can't really see anything wrong with it. I mean, it's an office REIT, and so maybe if I had to cherry pick like that, just people are not very bullish on the future of office spaces. But guys, like, this company's doing really well. Strong top line growth, strong funds from growth on the funds from operation, which is like the bottom line. That's what they use to pay the dividend. Strong dividend growth. I think growing book value per share over time. Great looking balance sheet. Like, this company's, it's just looks like a really conservatively run real estate investment trust. And the manager too, or the CEO, I like him. He seems like a guy with a good head on his shoulders. Let's see here. Thunderclap Pax wants to know, hey Ryan, man, thoughts on ARR? Let's go take a look real quick. Let's go take a look. ARR. Guys, I gotta get rid of these sniffles. So Armor Residential REIT, I was just looking at this one. A couple days ago briefly. Someone was asking me about the ticker symbol because they couldn't put it in the spreadsheet, my free spreadsheet, and they couldn't figure it out. They were looking for this stock, but they kept putting in APR. And maybe it was just a typo, but yeah, this is what they were looking for. So first I want to look at the dividend stats. High yield. Okay, they must have reduced the dividend recently right here, but excuse me. Let's go take a look at the financials real quick. I'm going to remove this. Okay, so, they're a mortgage REIT is what they are. Okay. Okay. So just right off the bat, to be honest, this is a huge red flag. Total revenues, okay. The great majority of their revenue is coming from interest in dividends, which makes sense. They're buying up mortgages, other mortgage securities, and they're getting interest and dividends on those mortgages and securities. That's how they're making their money. But over time, the interest they're collecting on these and the income they're collecting on that interest is going down. That's not great, and that does not bode well for the dividend, which would explain why we're seeing the dividend per share going down. And so, you know what? I actually wish I would have looked deeper into this stock sooner. This Sunday, guys, spoiler alert, I'm putting out a video on dividend stocks you should avoid. I would have added this one to the list. We don't even have to look deeper than what we already saw. Declining revenue, declining dividends per share. I didn't look at the rest of it, but a company's not going to be able to sustain a dividend if it's decreasing in the top line sales, bottom line certainly, but you can't have a growing bottom line if you're top. Well, I guess you could, but if you're cutting expenses, but for the most part, you're not going to have a growing bottom line if your top line's sinking. So yeah, nice 20.5% dividend yield, but no thanks. Over time, your income, as the years go on, your income's just be diminishing, and that's the exact opposite of what you want in an investment. Does that make sense? Let's see here. Oh, Rashawn, the legend Rashawn. What's up, man? Ryan, you're the goat. Or is that a sheep? Ryan, you're the sheep. Glad I finally got to catch you live. I'm glad you're here too, man. We've been waiting for you. Glad you're here. Let's see what else we got going on, guys. Some other good comments. Yeah, Kevin, you're right, man. Nothing wrong with buying stocks in the green. This was from an earlier, something we were talking about earlier for those of you who recently joined. Nothing wrong with buying stocks in the green. It builds depth. Yeah, I think you're right. And that's just a weird psychological thing I have, something I'll get over, and kind of am for some stocks. But because you're right, like you can't build big positions if you're not willing to buy stocks when they're up. If you're only buying stocks when they're in the red, then it's like, you better load up while they're in the red then. But like for us, this is kind of, I think this is what I was meant to say earlier. One of the things I forgot to include. Most people like us who instead of doing big lump sum investments, multiple $1,000s at a time, we're dollar cost averaging. And in that instance, it's going to be hard to build meaningful positions if you're only buying in the red. If that makes sense. Some homeless man wants to know. Some homeless man, I don't know if you saw earlier in the stream, you might have joined afterwards, but we gave you a nice little shout out at the beginning for being 16 and having over $200 in dividend income. So hey, once again, since you're here, good stuff. Like I'm proud of you, man. You're keep up the great work. You're doing great. And too, like going back to the ARR thing, thunderclap packs, you thunderclap, and also you guys regarding ARR and what we saw there. Am I missing something there? Am I tripping, or am I on par here with that? With my brief analysis of that, I'm curious. And in all fairness, I could be missing something because I don't really have a lot of experience analyzing mortgage REITs or even looking at them. But that's just trying to deploy some common sense. It doesn't make sense to me that a company is going to be able to sustain its dividend or be worth a long-term investment if the numbers just look like that. It doesn't compute to me. But I could be missing something. I don't know. Dang. So Peach picked up some Microsoft at 216. I keep forgetting how cheap Microsoft is, but oh my God, it's unbelievable. I remember. You guys remember this too. It really was not that long ago that it was up over $300 per share. And look what happened. I so wish that Apple would just have a similar trajectory, but Apple's been holding strong, guys. I really want to get Apple. Like I have a price target set on Seeking Alpha for like once it hits $130 per share. Okay, I'm going to keep a very close eye on it because below that, I might start a position in that. But yeah, Peach, good pickup, my friend. That's great. Also, tell your family if they're watching too. If you guys are all watching, thank you guys all for tuning in. That's so cool that you guys all watch this stuff. That's awesome. Who should join? Who was I taught? Oh, my mom. Probably my mom. That'd be fun to do. My mom. She's not a big stock person, but she has retirement accounts and stuff like that. And one of her bigger positions is Apple. Her Apple cost basis, I don't think I'm going to get this right, but honestly, guys, I think it's like, oh gosh, I think it's somewhere under $70 per share. Like it's low. It's just like I'm jealous at how low it is. Like she has a great Apple position. Yeah, my mom doesn't watch my live streams now. It's unfortunate, Steve. So I don't think any of my family really watches this stuff. They're signed up for the newsletter because that's easier to read. It's like takes 3 minutes to read through it every week. So they're signed up for the newsletter, but they don't often watch my videos or tune into the live streams. Maybe every once in a while they'll watch the videos, but yeah, I don't know. Oh well, they're lost, man. Oh, this is a good question. So Brian G wants to know, do you invest in sports cards as well as stocks? They can be similar if you know sports well. No, that's a good question. I don't. I don't invest in sports cards or really anything outside of stocks, and I have a small real estate portfolio that I'm really trying to build, and will over the years. I know that. Excuse me. But no, I'm actually, truth be told, I'm not a big sports guy at all. At least the conventional sports like football, baseball, basketball. Not really my thing. Since I moved to Vegas, I'd like to go to a hockey game. Like hockey's a big thing out here. We've got the Knights, and I heard hockey games are really fun. So I'm looking forward to checking that out at some point, maybe getting into that. But outside of that, like growing up, I was always into other sports like skateboarding. I skateboarded religiously as a kid. Once again, Harris and I were talking about this recently as well. Skateboarded religiously. I snowboard at least a few times a year still. Love snowboarding. I've surfed once. Skimboarding, I don't know if you guys know what that is, but a big skimboarder, that was always my favorite thing with skateboarding. So I was always into stuff like that, wakeboarding, just the board sports. That was more my thing. And bodybuilding, interestingly enough. I really am into bodybuilding. What else we got here? Oh, nice. Logan man. Joined late. Really happy this week. Hitting $800 in dividend income annually. Logan, congratulations, man. That's awesome. That's so cool. Like, keep up the good work. Pretty soon, like maybe, probably not by the end of the year, but I bet by the end of the first quarter next year, Logan, dude, you'll be over $1,000 in dividend income, no doubt. Good stuff. No, I didn't. I said that. Steve, I said when I pulled up KRC, I said KRC said he likes KRC. I got that, man. I got that. Yeah, I got it, man. Phil, I got it too. You guys are just gonna go have to. You're gonna go have to watch the replay. Wait. Okay. Regarding ARR, Charles says forget it. Okay. Cena says it's terrible. Authentic's not into it either. Peach isn't into it. Emmanuel, it's a yield trap. I have some as an amateur mistake. Oh, man. Okay, this is a good question. Richard says, thoughts on FTX? A lot of noise in the YouTube space of the guys that advertised it. Yeah. This is interesting. I've been thinking about this these last couple of days as more news have come out about what's going on with FTX. And truth be told, I'm not entirely filled in on what's going on. I think are they going bankrupt or what's the deal? I know they were maybe getting bought out, but then that fell through. But either way, they maybe won't exist anymore. I don't know what's going on. And regarding the YouTubers who advertise it, I'm kind of conflicted on this, because no, I'm not actually. I guess I am actually. I'm a little conflicted on whether it's on the ethics of them advertising it. So I understand why they'd want to. They probably were paid a lot of money to do so, and a 60-second space in their videos, time slot in their videos, is not a big deal. I've actually did one sponsorship recently for Mint Mobile, which was cool. It wasn't a lot of money, but it was a cool experience, and I'm glad I did it. You guys might not all be into Mint Mobile, but it was nice. You gotta pay the bills, and so on one hand I understand, but at the same time, like, man, there's been too many platforms like this. I feel like gosh, what was it? It wasn't Coinbase. What was the one? There was one that just went down, guys. There was another one like this. I don't remember. But anyway, long story short, there's been these different, I guess, crypto platforms. Not that FTX is strictly crypto, but whatever. These new ones that come up onto the scene and have a huge marketing budget, because that's what they have to do to get their name out there, is advertise with these creators, with these influencers, is what they are, the influencer marketing. And so I don't know. I don't know, Richard, I guess to answer your question, that I have obviously not any clear thoughts on it, because I'm just kind of tripping all over my words on this, but I don't know. I think a lot of people might be given I would imagine people are giving some of these YouTubers who did promote it a hard time about it. But ultimately, I don't think that there was any ill intent on the part of the YouTubers like Joseph Carlson. I know, especially more recently, he's promoted it a handful of times, and I'd be hard pressed to believe that he did it to try and scam his community. I don't think he'd ever do that. I don't even think people like Jeremy who promoted it, or Graham, or Andre, or even Kevin who promoted it. I doubt the intent was ill. They were just trying to make some money on their sponsorships. But I don't know. Gosh, guys, I'm so sorry. I'm getting the sniffles more as time goes on. So, Chris, this is actually a good question. So, guys, it's 5:50. Let's just go the next 10 minutes. We're close enough to the end. We'll hang in there. What is a good average to buy into Microsoft? Well, Chris, it's what did someone say earlier? It was 217. I don't think that's a bad price at all. When I was looking at Microsoft before I made the decision to buy Apple, which maybe I don't know. I'm not going to reconsider. They're both great, but I don't feel like I personally need both. I think Microsoft's not at a bad price right now, personally. When I was looking at it, this is what I was going to say. I told myself, if it gets to, I think it was like 225 or 230 or below, looks good. Rex, this is a fantastic question. And I've talked about this. I've talked about this a few times, and I'll probably share this story a few more. But I was introduced to investing by my parents. My dad's big into investing, more so real estate than stocks. That whole side of the family is big into investing. My dad's side, my grandpa's into it. My great grandpa was into it. My dad's into it. More so real estate, though. We come from a small town, really small town in Northern California. And back in the day, my great-grandfather, it probably even started before him too, but my great-grandfather bought up a lot of real estate, and bought it through the business that they have. Not a real estate business, different kind of business, but the business bought real estate. That was passed down to grandpa, who ended up taking over the business. Then my dad ended up taking over that business. So it's a multi-generational business, and there's a lot of real estate assets in there. And even just on a personal level, my dad and stepmom buy real estate and stocks and all that jazz, life insurance, tons of different kinds of things. So when I was probably 11 or 12, they made custodian accounts, which are basically accounts that are managed by your parents. So they made custodian accounts for myself and my brothers and my siblings. I've got two brothers, two real brothers, a stepsister, and I have a half brother. And so custodian accounts for everyone. And it became kind of a running joke in the family, because from that point on, every birthday, every Christmas, anytime there was a gift to be given, it wasn't, something that a normal kid might want. It wasn't a new game for Xbox. It wasn't Grand Theft Auto. Okay, it wasn't a new skateboard. It wasn't a guitar. It was money for Charles Schwab. And as a kid, 11, 12, 15, 18, 23, you're like, okay, thanks, Dad. Okay, thank you. Like, what am I going to do with this? I don't care. I don't even know what is this? What am I going to do with this? Like, so anyway, it became the running joke in the family, because we were like, no one's into it. We're too young to really care about it. But they said, you're going to thank us someday. Like, someday when you get older, you'll understand, and you will thank us for doing this. You'll be grateful that you have this. And Rex, it probably didn't hit me until I was 25 or 26 that it finally started to click why I needed to be doing this. And furthermore, it really didn't click, like lock into place, till I learned about dividend investing. Then it was just like, this is going to be kind of an exaggeration, but it was like my life changed. It was like I was opening my eyes for the first time. And sure enough, it was one of those I told you so kind of things. And that's how I got into investing. And so, I started dividend investing. I'm 29. I started dividend investing consistently when I was 27, maybe about 2 years ago, maybe a little more at this point. But prior to that, I had like an Acorns account that I'd throw $5 a week into. Then, I wanted a little more control over what I was buying. So I transferred it to Stash. That worked for a little bit. And then from there, I was like, nah, I want even more. I want to choose every single stock that I have. So I switched over to Robinhood. And soon after I switched it over to Robinhood, probably 6 to 7 months after I had my Robinhood account, which when I started it, after making those few transfers, maybe had a few grand in, no more than 4 grand. Probably 6 to 7 months after that is when I started my YouTube channel. And even when I started my YouTube channel at first, like I was not strictly into dividend investing. I had stocks. You can go back and see this in my early videos, which are so cringy, guys. Like, I pray for you if you go back and watch those, because they're not easy to sit through. So even then, like I had not gotten the dividend bug yet. So I was buying stocks, like, and you guys, you're gonna laugh at me, but I was heavily invested by, or heavily inspired, I guess, by the people I was watching on YouTube, which would people like me, Kevin and Jeremy. Jeremy was a big one. I watched a lot of him. And so I was buying stocks, guys, like Dropbox. I had Beyond Meat. I had Virgin Galactic. I had one of the ARK ETFs. This one actually worked out really well for me. I had Coty. I think that's how you pronounce it. Ticker symbol COTY. It's a beauty brand. That actually ended up working out really well for me. I did a few videos on it. But I had stuff like that. And so, I didn't really have I wasn't really disciplined with my approach. I didn't really know a lot about investing at that time. But soon after that, like I stumbled upon some dividend investing videos. PPC Ian, Andre, Jick, The Dream Green Show, Russ, Knopf, Dapper Dividends, these sort of channels. And then I was like, it made sense. And like I said, once I found out about dividend investing, it was like a whole new world. It was interesting. And, the rest is history. That brought us to where we're at today. It's been a fun journey. Paolo. What's up, Paolo? Demetrius. What's going on, my friend? So, guys, this is just probably like one or two more questions, and we'll wrap it up and call it a night, okay? Bill has a good question here. I get asked about this a lot, and I'm going to be making a video on this hopefully by the end of the year. It's on my radar, and I want to do it. Ryan, do you have an opinion on any of the Canadian banks? Not at this point. I haven't researched them too much, and I've heard that they're supposed to be superior to the U.S. banks. I don't exactly know why that is. I've been told before. I just don't remember. But yeah, I'm going to make a video sometime soon on the different Canadian banks, what seem to be the top 5. Because, yeah, they're supposed to be pretty great. Very popular bank stocks. Let's see here. Hey, Bluff, what's going on? How you doing? Let's see. Yeah. So, okay, Mark, trading with a dummy. Where's your comment? No, not that one. Not that one, Ryan. Sorry, I'm talking to myself now. So earlier we were talking about FTX and the other platforms that kind of sunk. Voyager was one I was thinking of. So, Mark, thank you, man. There was one more oh, yeah, right here. Celsius, I think, was the other one. Yeah. So, they come and go. And this is why I choose to invest with like a legacy broker like Charles Schwab, because I just don't feel like I have to worry about this happening nearly as much. And fun fact, actually, I'm reading, it's actually right here. I'm in the midst of reading this book right here, guys. It's House of Morgan. It's an American banking about the JP Morgan Bank, an American banking dynasty and the rise of modern finance. But I'm at a part in the book, I just read about it this morning, where JP Morgan and Charles Schwab teamed up to form a national trust for all of the steel companies. This was back in the late 1800s. And through that trust, they ended up buying U.S. Steel, which was Andrew Carnegie's. Is it Carnegie or Carnegie? I've heard it pronounced both ways, but they ended up purchasing his company from him for $475 million. And it was that transaction that made him the richest man in the world at the time. And I was actually telling Russ the story earlier today when we were texting. So what happened, Carnegie thought that he was going to get the best of JP Morgan with this transaction. He, was willing to sell it for $475 million. Morgan took the deal. They bought the company. And for a while, Carnegie, he was kind of gloating about it around town, going around saying that, he basically beat JP Morgan and, all this stuff. And I don't know if they had beef or maybe like a respectful rivalry, but he thought that he had gotten the upper hand in this deal, but it took some time. But he ended up coming back to JP Morgan and saying, I probably should have sold that for an extra $100 million. And JP Morgan just kind of slyly said, you're right. And you know what? I would have paid it too. So kind of fun piece of history for you. And actually, with that said, guys, I highly recommend this book. It's not just about JP Morgan. It basically, what I'm taking away from it so far is it's a lot of connecting the dots of how certain corporations came to be. Like they mentioned Goldman Sachs, they mentioned Lehman Brothers, and it starts all the way back in, oh my goodness, the mid 1800s, and the book's gonna, when it ends, it'll cover up to like the 1980s, up to like the 1990s. Very interesting, and it just covers a lot of things, a lot of different periods of time, and how how the financial aspect of it shaped the rest of the world, if that makes sense. Very interesting, but it's long. It's like 700 pages, but it's great so far. Anyway, guys, I'm like 10 minutes behind in the chat. Sorry, guys. Telling my stories over here. Let's see. Yeah, I think it's about time to wrap it up real quick. Ultra Runner, what's going on, man? Good to see you in here. Phil, this is a great question. Ryan, any collabs soon? Nothing concrete in the books. I just the other day recorded a podcast with Harris, the 1 Penny at a Time podcast. I highly recommend you check it out. You can find it on Spotify, Apple Podcasts, Stitcher, pretty much any podcast listening platform you can find it. 1 Penny at a Time. Excuse me, guys. I'm so sorry. That will be coming out in the next couple weeks, or next few weeks. I'm excited for you guys to check that out. We had a great chat. And but to answer your question, Phil, any collabs soon? Nothing concrete planned, like I said. I'd love to chat again with Harris on the Dividend Happy Hour. Him and Russ were on last week. Russ was on a couple weeks ago too. I'm sure I'll do a collab with Russ, do another video with him. It's always fun doing that. I've kind of been talking back and forth with Ari. You guys might know him as Blue Line Finance, but I've kind of been talking back and forth, trying to set something up with him, get a video together. I hope it works out at some point. It will. But I've been a bad communicator, to be honest. It's my bad that we haven't done something. There's a couple other things in the works. I'd love to, and I need to reach out to him about this. I'd love to have JJ Buckner on here. He pops in from time to time, and he's a good dude, and I think we'd have a fun conversation on here. So I'd love to set something like that up. But it's been a few weeks since I've been able to just have a one-on-one with you guys, and so I was actually looking forward to doing that tonight. But at the same time, it's this is funny. But at the same time, it's always fun chatting with people. Yeah, Richard. So I'm trying to set something up with Ari. It will happen at some point. I actually don't know Financially Fit, so I'll have to check him out. But that could be fun too. I'm really open to chatting with anyone. As you know, I'm really open to chatting with anyone. It's just fun having people on here and getting other people's thoughts on dividend investing. Okay, let's see if there's any more comments. Yeah, and I should have said this at the beginning of the stream, but Charles says a salute to all of us veterans today. Thank you guys for your service. And yeah, actually on that note, thank you all for your service, all of those who are veterans. I should have mentioned that earlier in the stream. I'm sorry I did not, but yeah. Anyway, guys, I think this is a pretty good place to wrap it up. Thank you guys all so much for tuning in this last hour, even though I've been sniffling, the cat's been scratching, my mom's been calling me, what else? I've been tripping over my words as per usual. So thank you guys all for tuning in, all 107, now 104 of you guys. Some closing thoughts real quick. Once again, if you missed my earlier notes on my newsletter, you guys hit the link in the description if you want to get my free weekly investing newsletter, basically every single week delivered straight to your inbox. I'm thinking Thursday mornings is going to be the schedule. And in that, I'll just, share my quick thoughts on the market or other things in general. I'll share what's going on in my portfolio, what I bought, which dividend stocks I picked up, what else in there. I also share just some other curated things that I listen to and find throughout the week, whether it's YouTube videos, podcast episodes, articles, stuff like that. Anything that I find interesting and want to pass along, I'm sharing it in this newsletter. And I'm also answering your questions. At the very end of every newsletter, I dedicate a section to answer questions that are submitted to me. They come from the comments here. They come from the videos. They come from people emailing me and sorry, I got distracted. Anyway, newsletter. You guys check it out. Get a bigger camera light. I don't think it's really not that dark in here. I mean, it's not bad. It actually, this starting this week, once the time changed, it got darker earlier, so that's why it's darker now. But no, I think it looks, I'm okay with the way it looks personally. I know it's not super ideal, and I'm sure in time I'll upgrade this setup, but I don't know. If I could turn this up, but it's gonna overexpose here, so I don't know. Anyway, guys, thank you once again for tuning in. I appreciate all of you guys. I hope you have a fantastic weekend. Be sure to check out Sunday's video. I'm talking about 3 stocks, guys, that you should avoid at all costs. Not good ones to invest in. So definitely check out Sunday's video. Tune in and leave me a comment there and let me know what you think about those stocks. And I hope you guys have a great weekend. Stay out of trouble and keep up the great work. I'm proud of all you guys for doing your thing and continuing to build that cash flow, because that's what we're all doing here. So you guys have a great weekend, and I'll see you in the next one.